And obviously it goes up to the prior swing high, and usually what happens is you see some selling coming in at that point, sells back off, and it pins and pins, and then the buyers come back in and go again, and then it goes back up to the swing high, and then it comes back down and it pins again at the same price level, and then it goes boom straight into a near 100% profit on your money. Straight into the near 100% return on your money on that stock pick there, guys. Beautiful. Now, as I said, normally what happens, of course, with these, the best ones are the ones that don't come down, because obviously if they come down, it means that there's nobody buying above the fair value price. You know, because fair value is obviously 25% below the market says. You know, fair value, because that's the overrun. So when the market makers come up with their overrun figure, then that's going to be something that's of interest, you know, because obviously most of the time these are just going to come straight back off. So when you're looking at some of these ideas, you'll see that this was a momentum pick. This was our number one pick. This is what we're talking about. When the stock goes straight up, this is usually a better pick, because you're normally thinking that that's got a 25% overrun already in it. So when it goes straight up, you want to try and jump on board as soon as you get an opportunity. So that went $8.45 up to $12. Well, that's a nice 50% winner on that one. 50% winner. Well, that's great news, isn't it? That's a great trade. Now, obviously, when you see stocks that start coming down from the open, like this one, this is our number two pick. When you see stocks coming down from the open, that means that everybody doesn't see fair value yet. And the price just drifts off and drifts off and drifts off and drifts off, and you're saying, well, there's nothing for us to do, is there? There's nothing for us to do. Just watch this ticker symbol just now, guys, ZNGA, if you're interested in stocks. There's a lot of call activity on this bad boy today. And the only challenge you've got with this, I would have shouted it out earlier, but the challenge is you're nowhere near the danger zone for the market makers on this one. The market makers' danger zone's up towards the $11 on this, so you can see that we're still miles away from that as a danger zone, but somebody is consistently buying around about the $10.50 level on ZNGA, so just bear that in mind, that if somebody starts putting gas to the metal on this one, gas to the metal, metal to the floor. If somebody starts putting some metal to the floor in this one, you could expect to see this price perhaps starting to get a little bit of danger for the dealers as we go above the 1060s and stuff like that. So just pay attention to this one if you're watching option trades. That's a good sell-off on equities. That was a one-and-done trade, wasn't it? Did you take that sell on the top edge, Mike, based on the sticky above us? You look at how Roe did on this trade, you'll probably start to recognize that Roe was very, very, very bearish top edge equities as we came into the cash open up here. So you can see that Mo's little brother Road was right on the numbers on this one. We just missed out on the bottom edge on this for this buy trade. It was kind of pinned down here a few times, and obviously row buyers were sitting there waiting for that bit of bottom edge just there. Pushed the price up, ran into the stops at 10 past 2. Ran into the stops just here at 10 past 2. Came off a little bit, drove back up and ran into the stops at just coming into the cash open, or drove higher into the cash open itself, spun the price around, and then absolutely collapsed in behind that row seller. So good trade there for us. Very, very easy to recognize it. Very, very simple, basic ideas. More row selling coming in on this level 2 retest here. So we got a level 2 50 pullback retest here. More row selling coming in behind that. And obviously all we're doing now is following row down to the bottom edges. And yeah, it's been alrighty. It'll do, donkey. Well, you know, Roe doesn't get it right all the time. I mean, but you know, it's really a US narrative, but you can see Roe was trying to bid into this phase here at lower lows, and you can see that Roe was bidding here, got a response. Roe bid here, got a response. Roe bid here, didn't get a response, so this became an accumulation box. There was no prisoners taken on that one, so that became an accumulation box for Roe. And we got a nice response back up to the 50 pullback, because now this is a 50 pullback, isn't it, at this stage? So you can already start to recognize that we've got a top edge in the background here. We've now got a massive row divergence developing in this stage here. We can see where the 50 pullback is located, surprisingly enough, at the 50 pullback level. And it all kind of makes perfect sense now, doesn't it? The idea of where the structure is. Once we understand that structure, we should already have known that this was the guaranteed discount price. So when you're trading safely, in terms of pure market structure, who was it that was talking about the guaranteed discount price? Well, there's a great example of how to use your guaranteed discount price. Because as a commercial trader, I'm buying here. As a commercial trader, I'm buying here. As a retail trader, you're looking for that guaranteed discount print right there. I'm looking for that guaranteed discount price right there, so that gives you the safe trade, knowing that the sellers are going to take profits at that price, worst case scenario, right? So the sellers do take profits, and obviously it punches the price right back through my original entries, and obviously this becomes a capping price at this stage. However, the collapse at 1:30 with the non-farm payroll number just says, okay, fair enough, we've got the trade. At that stage, you just say, fair enough, we've got the trade wrong, and you walk away from that as a commercial. And obviously at that stage, now we're seeing whether we can build another advantage. Well, when the road develops back into the bids again, then you're obviously going to try and bid into this as much as possible. All you're going to do now is buy and buy and buy and buy right through that whole phase, right? You're going to try and buy that whole box down there into the top edge. You can already see the top edge forming. So if I said to you, what are you going to do? I would imagine most of you are going to say, well, you know what, I'm just going to sell as much as I can. Now, you've already got a day high up here. So you're aware of this price for sure, right? So you're already aware of that price. And obviously that's the price that we traded into. I mean, it's not that difficult. All it is day high, correct, Mike? All it is day high. But above day high, you've got this huge gamma level that we told you about this morning, and yesterday we told you about it, in fact. So when row comes in and it sells going into the cash open, all you do then is smack up in some sell orders up at the top edge and smack it hard into that sell off there. On the pullback, you're doing exactly the same, and it's just been delicious. It's went 86s to a low print price of 73s. It's not 1,000, but it's a pretty good trade. It's pretty sensible, pretty easy. Nice. Yeah. All right. Take it. We'll take it, guys. We'll take it.